All right, good evening, everyone. Welcome to the Hurley Investments Market View commentary for the 6th of November. I believe I should look at my phone that I don't have right here, but I believe we'll have a couple more before we take a week off for it's over here. I'm in the wrong place. Where we'll take a week off for Thanksgiving. Although I guess we could do it through Thanksgiving. We're good. We just won't do our trade findings and adjustments. But we're coming to the end of the year. So if you are in the stock market and you're coming to the end of the year, what are a couple thoughts that will run through your mind as we're coming to the end of the year for our trading? There are usually a couple thoughts that I think of when I'm thinking of end of the year trading here. And if you don't know, type a couple question marks in. William, thank God it's over. Well, you could almost say that about every year, but yes, sometimes I would agree with you. But there's usually a couple things that you should be thinking of that come through at the end of the year. And Russ hit one, which I'm going to agree with 100%. Tax harvesting, right? Take losses to offset gains, knowing you have to wait 31 days to get back in for it to count as a loss. Meaning, if you're going to tax harvest and take a loss, you can't get in for 30 days. You have to wait 31 days for it to count as your loss on taxes. I sometimes have seen pretty inexperienced people. Oh, I sold it for a loss. I got back in the next day, and then it went up. So I did it. It's like, no, you now created extra commissions, and you have to wait till you sell it again to harvest those tax losses. You really didn't do anything. I think it's called the blue sky rule. So you have to be careful about how you do tax harvesting. But that is a really good one right there. Fund managers setting up their portfolios. So I think that came from Stuart, but the short answer is fund managers playing catch up. And I guess the super answer there is super bullish / buying to have the portfolios look better. Now there's a catch here. We'll call it FM catch, right? Some buy into positions and funds to show like they've, love this one, been in it all year. Trying to pull a fast one over you. So it's one that you're like, you know what? You gotta watch out. You gotta pay attention. You gotta have someone that's being somewhat honest with you in regards to what they're doing. All right, where did there it is. All right, let's see what else we have. Tech selling, how to make money next year with all the mess. So I'm going to talk about that one. Get the market moving, Mag 7 especially. Make money next year a little bit. So, and it's interesting because usually what you're going to see about coming up is portfolio positioning. And I'm really going to change that into something that we call goals, right? I love going over all the research I do over Christmas. I spend hours. I do basically a half hour on every stock. And this year, I believe I got somewhere like 225 to 235, somewhere between 200 and 235 stocks I'm going to go over. So I'm going to spend about 100 hours over our Christmas break going over and calculating real potential on stocks, PEs, if they're fundamentally sound, some that I haven't seen before. I'm going to go through and do the best I can to make sure we're still in stocks that are fundamentally sound, that have a forward PE that show huge growth opportunities. But I kind of call it goals. And I'm going to call it goals, one, because I like going over it, but two, I do it because I've got a couple facts setting on goals. But number one, you are more likely to accomplish a goal, and that number is 42% if you write it down. Now, I'm going to talk about this because it's kind of interesting. A lot of people are like, well, you can't write down your goal and make the stock market move that way. And my answer, of course, is like, duh, of course you can't. But you can make your goal, and you can put the effort and work in to give yourself or your portfolio the best opportunity to be positioned for some really nice returns. That's what it comes down to. What can you do to position your portfolio to get some really nice returns? I also want to just make a comment that when you accomplish the smaller goals, and I'm just going to say in life, it gives you a mental, and I'm going to say physical, boost. Little bit of, and I can't remember the word I'm looking for, but that little boost, and your brain releases that chemical. It's just like, I've accomplished something. And I think I've shown you guys my Navy SEALs graduation where, the first thing they do in the military, dopamine, thank you, Stuart, a little dopamine push into your head. And the first thing you do in the military is they have you make your bed. They have you make your bed, and the honest answer is not because they want something to yell at you at, not because it has to really be flat, not so you can bounce a quarter off it. They want you in the military to accomplish something right away. Because let's face it, if you're going through basic training, you're going to be yelled at and you're going to get torn down like there's no tomorrow. And it's the military's way, at least for some of the Naval SEAL training. I don't know about the others, but at least for the Navy SEAL training, they want to give you your best opportunity to succeed by getting through your morning with a dopamine hit. And it's usually done by passing basic morning inspection. Your uniform clean, is your area clean, bed made. It's those little dopamine hits that you get praise on. It's not like the movies where they're just chewing into you and tearing it all up most of the time. 5 facts about goal setting. Specific realistic goals work best. We're going to go over SMART goals at the beginning of the year. It takes time for a change to become an established habit. Repeating a goal makes it stick. That's kind of saying the same thing. If you're setting goals to please others, it doesn't work. Roadblocks don't mean failure. And where I'm going to go with some of this is the question someone answered me. Can't I also become a registered investment advisor? And so I'm just thinking out loud, if you are educated, if you are willing to get registered, bonded, and insured, and if you are willing to make it a job. Because in all honesty, a lot of people are like, I can do this part-time. I can do it 4 hours a day. I can do it 4 hours a week. And the honest answer there is that's bullcrap. And if you are, you're not doing a good job. There really is no trading 20 minutes a day. There's none of that that works in real life. And for the individual that's here today, and I know your markets are overseas, but you still want to trade U.S. markets, the fact of the matter is anyone can become a registered investment advisor. You have to get educated, meaning you have to take some program. You have to pass the Series 65, usually 7, and 6 licenses. But the biggest thing that I see that people don't do is they might get through all this and then it's not a job, it's a hobby. And yes, the up days can be a day off. They can be. I'll be honest with you. At 1 o'clock today, I went and helped my kid cut down some trees and get some stuff to the dump and stack some wood. But that was after being up at 5:30, 2 hours before the market opened, checking where our positions are, seeing what had to come off, monitoring the market through that first hour, listening to CNBC, reading a ton. I always get up an hour, hour and a half before the market opens to read and consume as much information as I can over what happened the other day. Earnings. Some people think going over earnings means you listen to their earnings or you see the recap on CNBC. You see the news that someone writes in about Apple, 6 hours later on Yahoo or Google Finance, something like that. If you don't take the time to read through their reports, to look through their numbers, to see what's put out there, to listen to the guidance call, to read all you can before and sometimes after the market closes, to follow up on real earnings, to see what they were the year before, to go through Schedule Ks for companies, to go through the financials for companies, you'd be doing yourself and your clientele a disservice. If you're putting them in the market or in a fund, you're saying that you're okay with 96% of the time your client's losing money. That is unacceptable. If you want to make it a goal to become a registered investment advisor, it truly has to be a full-time job. And yes, most people are going to take 2 to 3 weeks off. I've already got 100 hours of work between the time off that we're taking from the webinars through New Year's to go through somewhere between 200 to 235 stocks. I think it's 225 to 235 stocks to work my numbers to make sure that there's something I haven't missed in the last 6 months of being in positions that have the best opportunity to double in value over the next 12 to 18 months. That is what it takes to do this. Can you fake it? Can you act like you're doing the work? You can. But it really will come down to the fact that sooner or later, if you're not doing that amount of work, if it is not a full-time job for you, if on your days off because the market's up, you're not putting in the work to understand why it's up and to check your stocks, to check news on individual stocks, you're fooling yourself. And please don't think that you give a crap about your clientele, because you don't. You're just like every other person out there that captures the money and then forgets about the people. Do you have to do webinars? You don't. Are you going to run into times when things are tough? Of course. And if you quit in those times, I'm going to tell you right now, if you don't like anything I've just told you in the last 5 minutes, this is not the job for you. So don't worry about it. All right, really quickly for today, S&P was up a nice positive 1.8 after the best week in, I think it was 3 years. Last week was the best week of the year. I should just say year. Crying out loud, can't type. Year to date. And our charts look a little different. Let me go through the charts with you really quickly. Last week on the Dow Jones Industrial Average, we were bearish. And the thought was, hey, we're bouncing off of oversold. I'm going to get the yellow highlighter right over here. And in 5 days, what a bounce. 32 to above the 200 to above the 50-day. So we're now looking for the next week or two to build a base. Pretty neat, because that'll run right into lower volume time on our Thanksgiving holidays, which we should see a nice bounce going into this month because of our holidays we have coming up. If we take a look at the Dow, that is the Dow Jones. If we take a look about the S&P 500, bearish but bouncing off of oversold. Exactly the same thing. I told you it might be really hard to get over the 200-day. It apparently was not. In the 7 to 8 days, there were not enough sell orders put in that 30-day period they have to position their orders. We got right through the 200. We are now building a base. Don't be surprised if we go through 1 or 2 weeks where our market just runs sideways as it builds a base for a nice bounce into December. NASDAQ, just like all the others, I would tell you exactly the same thing. Bouncing off of oversold in 1 week. Got above the 200-day, got above the 50-day. 4 days to start for them to place orders, sell orders up there. It could not be done quick enough. We now are bullish on the NASDAQ. So does this mean that everything is in the clear? No. In fact, kind of funny because what happened to catalyze the reversal? And this is briefing.com, and they're doing nothing more than reaching on all this. Head fund manager Bill Ackman said on October 23rd that he covered his shorts and bonds because there's too much risk in the world to remain short bonds at the current long-term rates. He spent billions getting his butt handed to him with huge 50 to 60% losses. But that took the short squeeze out of bonds. The 10-year note ran resistance at 5%. People were taking profit, selling bonds that were up there higher. I don't know about Bank of Japan, so I'm not even going to waste my time on it. The Treasury reduced its Q4 borrowing estimate by $76 billion. I know that seems like a lot. It's not. The Treasury said its Q4 refunding would involve larger instances and auction sizes for 2, 3, 5, and 7-year maturities. What does it say? Then the 10, 20, and 30. So we're going to sell more short-term treasuries versus the longer term. So we don't have to pay this expected high interest rate now. Don't forget, treasuries can be called. So if we get extra money into our treasury sales, they can call and buy back treasuries at this higher interest rate, which means in the future, those rates will probably be coming down. Here's an interesting one. Bad news is good news. The October ISM Manufacturing Index showed contracting at a faster pace in October, sliding to a 46.7 from 49.0 in September. Our economy is shrinking in the manufacturing. It actually is technically bearish. Fed Chair Powell did not sound hawkish in his FOMC conference. Unit labor costs have declined. This is an inflationary measure. The October employment report checked all the right rate relief boxes, showing a slowing down in hiring. Bad news is good news. An uptick in the unemployment rate. Bad news is good news. A slowdown in wage growth. Bad news is good news. And short sellers on a whole covered their positions. They're reaching. We still have a lot of things that are out there that are risky. But here is the thought process that I think is more important. It is all well and good right now to cheer less good economic news, but a steady stream of bad news will spoil any rally effort if it turns into a flood of downward earnings revisions. This may not happen in the end, but it is a risk to take into account that leave the stock market in no man's land waiting on a perceived rate cut solution. And we're nowhere close to a rate cut. A rate cut won't happen until sometime till the middle to end of summer in 2024. Unless all this bad news starts to tumble on itself, I guess, a snowball rolling downhill, then our markets will look really bad. It's something to stay in touch with. And for those of you that asked, yes, we have been running numerous positions without protection after good earnings reports. And yes, we took off Apple puts today. What a quick bounce. Down to 170, back up to 178. Watch Apple possibly roll all the way up to 190, if not 200, by the end of the year. All right, let's see where I'm going next. I've changed where we'll end November. I'm turning more bullish. Last week I thought we'd be up 1%. I'm moving that to 2.5%. Earnings, I guess I didn't want to put everything in. Dish, Goodyear Tires, Jill, is the Realty REIT and Trip. I should do a better job of putting all these in. Tuesday, DH Horton, Uber, Akamai. Tuesday, we had DH Horton, we have Uber, we have Akamai, we have Devon Energy, and we have GoPro. Wednesday, we have Triple D. We have Beyond Meat. I like seeing them keep going down. We have Lyft. We have MGM Grand. And the more important ones for us, Under Armour, HubSpot, and Disney. Thursday, we have Tapestry, the old Coach, and Wynn. There are no earnings that I saw fit to go ahead and put in on Friday. Economic reports, trade balance, consumer credit, MBA, wholesale inventories, initial claims, continuing claims, Treasury budget, and Michigan sentiment. And the reality is not too much here, but I do have this article again. It's going to be a bloody war. Why Israel's long war will be nothing like what it's faced before. I really love this picture because how devastating it's going to be on the Palestinian people. I do hope they take care of Hamas, but I got to tell you, not fair to all the people in Palestine that have nothing to do with Hamas. Block shares surge after earnings. If you're interested in talking to me about getting into Block, it did surge significantly, but there's still a lot of upside potential. This is Jack Dorsey again, though, just so you know. It was unfairly beat up because of a rumor. It might be a good opportunity if you have some cash on the side looking for us to enter a new position. I have all of the Apple numbers. And in all honesty, I thought it was pretty interesting. Their earnings per share is pretty good. Their revenue is pretty good. Their iPhone sales was excellent. Their Mac revenue missed by almost $1 billion. Their iPad revenue beat by over $350 million. Wearables was in line. Services was out of the world, beat by $2 billion, and their gross margins increased. It was a great earnings event. They should never have gone down. No reason to go down. Let's see here. Number one thing parents can blah, blah, blah. I found it interesting, but I disagree with it. Number one parents can believe forgetting about teach their kids today is that saying a parenting expert and mom, they're saying that we're not giving our kids enough happiness, which is kind of like, how about the one thing that we're missing is for our kids to have some accountability. Interesting article, disagree with it, but for the person that talked about this article, I thought I'd throw it in there just so you knew that I read it, and I thought it was not really important. I disagree with it, but I will show both sides. Okay, I know I just came back. Any questions you guys have for me? Are there any questions you guys have for me that I can answer for you? User error, that was my mistake that I got us kicked out, got me kicked out. I do apologize. And it looks like we lost about 7 people. So, dang it, my bad. But any questions you guys have for me? Yes, right now we are going to let some things run without protection so that they can hopefully run into a good earnings and run into the end of the year for a Christmas rally. I'm not counting on a big Christmas rally, but the neat thing about owning some undervalued positions, if you read my email that I sent out to you I believe, I don't know when I sent it out to you. Recently, how about that? Maybe on Friday, Saturday, Sunday, recently. I do think we have a lot of positions with some huge upside potential. Okay, I don't see any questions coming in. Any questions that I can answer for you guys that maybe, there they are, they're coming in. Okay, 4 questions. Number 1, do you think Ford gave away the farm in the unions? Is that why they are underperforming? So they're underperforming because Ford is still trying to make electric cars based off their current lineup of vehicles. And their current lineup of vehicles is made from steel that is Ford tough. Their current cars are too heavy. Plus, if they run all of the current AC and all the perks that come with Ford trucks, you can load up a Ford truck, an F-150, and pull 3,500 pounds and only get 68 miles to the gallon. Ford right now is being run poorly because they are still trying to take their current vehicles and make them electric instead of creating new vehicles that will run electric. And there's a big difference. The Ford Mustang is kind of interesting. It's a really zippy fast car. It's a deathmobile. That was the first car that they're starting to change. And they still don't have the batteries to get that car to run decent mileage. But it's a deathmobile. In fact, the biggest problem I see is we're talking about all the Tesla cars that the batteries used to blow up. It's because they were run poorly. Yes, the battery shouldn't blow up, but if you're going to go hit a tree and you don't have the same crumple protections in the vehicles like you used to, you're going to run into a problem. And Ford is still losing billions of dollars. If they were just saying, screw it, we're not going to do electric vehicles, you could have added around $11.5 billion over the last 3 years, and they'd be a $60 to $72 stock. Mod, what do you expect to Baidu for earnings coming up? I would expect really, really good from earnings again from Baidu. They were weathering the storms of the government slash restrictions slash the government monitoring and running everything. They beat it then. Things have only loosened up. They should do better now. I would expect Baidu to really knock it out of the park and to at least get back up to the 135, if not the 150 level, pending good earnings. If my numbers and earnings are off on Baidu, then I truly don't know what's happening with the channel checks and what's being said over in the other country. But I expect a big up opportunity on Baidu, partially because political tensions have eased, partially because their government have been less restrictive, and because their economy has been coming back, at least it looked like, for their GDP numbers. All right. Kevin. Well, I think I already said that. Kevin, where do you expect Apple to head up to? I would think it would go to 190, if not 200. But I think 200 would be a super tough psychological level to get over, even though they did so good. I think their guidance was a little weak, where they've got to get 122 billion, and some of the sales on their iPhone 15s, since they're not a really good phone, will probably not come to pass. So that would be my expectation on Apple. And Disney, same thing on Disney. last time we were worried about Disney and that their parks weren't doing as good as they were supposed to. Well, their parks were fine, but Disney still got beat up without an excuse. We do have the Marvels coming out, which should be a billion-dollar movie, and they haven't done as bad on movies because they haven't put out some of the ones that they were looking at doing. So again, I would expect Disney to have good earnings. It might come back down to how many more subscriptions they've lost in India, and if they can get back to showing profitability there. But at least on their parks and their movies in general, they should be doing better. If Iger can show that he's going to rewrite the ship and rearrange things the way he was trying to do before, you could see a huge run into next year. But he hasn't. He's got to come out and be bold and say, hey, some of the movies they spent money on are just going to be losses. They've got to do a better job in recapturing what they lost in India for their cricket games, and they've got to be they've got to do a better job on their movies without offending their conservative U.S. base, would be my answer to you in regards to that. And just a quick other comment there. Do I think the Fed gave away the farm to the unions? A 6.5 yearly raise isn't, well, that's huge by standards, but they're going to price it into their cars that people still seem to be buying. So yes, I think they gave the farm away to the unions once again. They should focus on getting more union people out and more non-union workers in, because all it's going to do is pass on the cost to us. And it's ridiculous that trucks are over $100,000 right now. If I wanted to get the truck that I want with some of the bells and whistles, not all of them, I would spend $128,000. And to be honest with you, I can't see pulling the trigger on that anytime in the near future. That's just outrageous. I know there's some people that will. That just won't be me. And all right, I think I've got all the questions answered. Are there any other questions I can answer for you? So yes, I'm positive on earnings for Disney, for Baidu, for Under Armour. And if we go back up to the earnings that we have left here, Baba, I don't know about, to be honest with you. Baidu, I'm positive on. Costco's been running. I'm very positive on Costco, Disney, Under Armour, and Micron. So, yes, on all of those, I'm ready to go. I just don't know about Baba. Mod, when do you think Disney dividend reinstatement? I don't know. There's been nothing telling in regards to that, so I don't know on Disney. That might be something that could spark a catalyst going into this earnings session. But to be 100% honest with you, I don't know. I don't know when they're going to reinstate their dividend. It will be interesting to see. Good question. I don't have an answer for you. Are there any other earnings questions coming up? And I'm kind of going through to see if I missed any, because we did have a couple comments coming up. Any other? All right, guys, appreciate you being here. Sorry I kicked myself out of our webinar. That was me. I want to blame, I'd love to blame GoTo, but that is not them. That was me that accidentally did that. So I apologize. Appreciate you guys being with me tonight. Look forward to seeing you next week, and we'll get this uploaded most likely tomorrow evening, I think is Dave's schedule. So it's a little busy right now. We'll get this uploaded most likely tomorrow evening. You guys take care. Have a great day. Talk to you then. Bye-bye.